Let's get into section C. We have two questions, both are 20-mark questions. One will be on performance evaluation of a company and the other one will be on other things. That sounds a bit flippant, but we know we will always get one on performance evaluation because this is a performance management exam, and the other will be taken from other parts of the syllabus area, but not every part. There are some parts, for example, advanced costing, that doesn't get tested in section C. So as we've got 20 marks for one of the section C questions and 20 for the other, there's 40 in total. If we use our 1.8 minutes per mark, what that means is we've got 36 minutes for one of the questions and 36 minutes for the other. That doesn't mean we've got 72 minutes for one of the questions and none for the other. Make sure you keep an eye on the time, allocate 36 minutes to one, and when that 36 minutes is up, move on to the next one, unless it's just a few seconds finishing up a point. Some students really let themselves down in section C and leave one completely blank because they dedicate all of their time to the other one. You mustn't do this. You must allocate the time across both and be very disciplined. It's hard to walk away, but you must do that because there's going to be some marks in the second one that are going to be easier to get than the final few marks in the first one. We did take a brief look at both of them before we even started section A. So for the first question, we've got 4 marks. We've got to reference ACCA and explain the characteristics of a service business, and it's given us 4 words: intangibility, simultaneity, perishability and heterogeneity. 4 marks. Those are jumping out as the headings that I'm going to use. I like the idea of headings, and you see what I've done there. So I've copied and pasted. I've then used bold, underlined them, and I've got my answer plan laid out there. And then for 16 marks, we're told to use this template, and there are 6 marks available for calculations. Based on the 6 dimensions of Fitzgerald and Moon's building block model, calculate the following KPIs as shown below for 20xt3 and 20xt4. Analyze the performance from 20xt3 to 20xt4 with these assigned KPIs as well as any relevant data provided. And it's given us the 6 dimensions here. It's given us the KPI for each of those. We need to do the calculations and the performance analysis. If there are 6 marks for calculations, that means there are 10 for the rest of the question. And given that there are 6 dimensions, we can assume there's 1 mark available for some, and then some of them, our analysis is going to want to get 2 marks. You might prefer to do this first, you might prefer to do the other one. It's really up to you which order you do them in. I'm going to do them in the order we've been given them. So Auto Clinic is one of the authorized automobile service centers for one of the leading electric EV manufacturers in Estland. The role of these authorized automobile service centers is to provide compatible battery repair and maintenance services at locations where there is no service center operated by the manufacturer. There are 2 main types of services provided by all of these service centers. There's a warranty service and an out of warranty service. The warranty service is services provided where all authorized automobile service centers will charge the manufacturer with the same service fee per service, and the out of warranty services provided where all authorized service charge centers will charge the owner based on the service fee per service that is set by the respective service center. So there's a bit of a difference there. It's important to pick up on that. Warranty service, they carry out the service and they charge the manufacturer, and it's the same fee. And then the out of warranty, they charge the EV owner, and the fee is set by the service centre. It is common practice that most service centres will provide complementary services such as car wash, interior sanitising, etc. in order to attract and retain customers. ACCA has been well known for its excellent workmanship in repair and maintenance services, despite many comments relating to long waiting times and limited complementary services when compared to other service providers. Data extracted from management accounts for the most recent periods ending 31st of December are as below. We've got 20xt3 actual, 20xt4 actual and 20xt4 target. We've got revenue data, we've got operating profit, information on profit for the year, the non-current assets and the working capital and the operating profit margin, and then non-financial data. We've got the number of services performed, and it tells us that warranty and out of warranty are equal. Number of technicians, number of return in service due to last faulty service, where something hasn't gone well, average operating hours per week, average queuing time per service hours, and then whether it's offering those types of complementary services. So these characteristics, this is just taking some of the knowledge that you should have built up when you were doing your studies, given definition, but wrapping that definition up in AutoClinic itself. So rather than just give textbook definition, what we want to try and do is loop it back into AutoClinic and what it does. So here's my answer to part A. We're targeting 4 marks. So I've done 4 separate short paragraphs, each consisting of a couple of sentences. I have got a few typos in there, which happens when we type quickly. Don't waste time going back and correcting them. I can immediately see I've misspelled equipment there. As long as it's clear the word that I'm trying to say, there are going to be no marks for going back and correcting. So therefore I'm not going to waste my valuable time doing that. I will correct any where perhaps it's created ambiguity, but I wouldn't correct any where it's obvious what I'm saying. For intangibility, I've written ACCA customers cannot physically see or touch the services before purchase. Quality will be judged on factors such as reputation, trust and past experience. Long waiting times have received comments, and customers may judge the quality of the service based on factors such as this. So I haven't just defined intangibility, i.e. they cannot physically see or touch the services. I've mentioned the name of the company, and then I've used an example from the information given on the left, which may lead to how customers judge it. That's adding value based on the information we're being given. Simultaneity, the service is consumed at the same time as it is produced, so customer experience occurs in real time, i.e. whilst the technician is carrying out the service. Perishability, slots available for servicing by AC cannot be stored or saved. What's the implication here? This means if a service slot isn't filled, the potential revenue is lost. Scheduling and forecasting are critical to maximize utilization of technicians and equipment. And finally, heterogeneity. Each service carried out is different. It will depend on the EV model and the faults identified. Once again, specifics from the scenario linking to the definition. Similarly, each technician will have a slightly different approach. What can they do about this? Standardizing where possible, combined with staff training, are essential to ensure consistent customer satisfaction. That's an answer that will achieve 4 marks. That's as much as we need to say. I don't need to give lots and lots of examples for each. Just one example where relevant is all I need to give. I've incorporated the definitions. I've got a neat layout. The examiner would look at that and they would welcome that kind of approach. Some students would join all of these 4 sentences together, and it just makes it a lot harder for them to see where one point begins and ends and the next one begins and ends. It doesn't take any real time to use headings like this, and what it does mean is because I've used the headings, I don't actually have to use the word in the sentence. So I think I actually end up saving a bit of time by using the headings. So we've got 6 marks for calculations, but it's told us what calculations we're doing. So if you are stronger on calculations, maybe you want to go through and do all the calculations, make sure you pick up those 6 marks and then start doing the performance analysis. I think there's an argument for sticking with each one as it is. So focus on one of these building block dimensions, do the calculations and the analysis, at least getting 1 mark, and then do the next one, the next one, the next one, the next one. That should get me all 6 marks for the calculations and 6 marks for the narrative, which means I've left 4 marks on the table. Then if I've got time, I will choose 4 of these and go back and make an additional point to try and capture those last 4 marks. If at that point I've run out of time or running out of time, I'll be moving on to the other section C question. Another thing to think about is whether we show our workings for calculations or not. I personally wouldn't show the workings for every single one. You might want to show the working for one of them and then just the answer for the others, because I don't want to waste my time writing the working out for each. If I've carried out an incorrect working on all 3 and I've shown it for 1, the marker will see what I've done wrong, and I might still capture some of the marks because I could get follow through marks. And that's the approach I would take here. I think it's probably a little bit risky in this one just to put the answers in because it doesn't show any workings at all. So that's what I will do. I will show the workings for 1 and then the answers for the others where relevant. So I've done my calculation for return on capital employed. I've got 15%, 12% and 10%. I've shown the workings for the target, and I've made a comment which should score a mark. I've written that it's improved by 2 percentage points in 20XT4 compared to 20XT3, and it's still below the target. That probably isn't enough to score a point. All I've done is rewritten the numbers with a sentence, but that opens up an opportunity for me now to add value. And if I look across at the figures, what's caused that change? Well, I can see the operating profit has gone up, but not as much as we hoped. I see the non-current assets have gone up, but not by as much as expected. And I see the working capital has gone down, whereas we expected it to go up. So the improvement is really a combination, as I've written here, by an improvement in operating profit and a reduction in working capital. So I've put the improvements due to that improved operating profit and a reduction in working capital. What I should now do, or could now do, is comment on the target that's not been hit. But to me, that's the second mark I can score in this one. And so I'm going to move on and do the other 5. And then if time allows, that's when I'm going to come back and make a second point here. So the competitiveness KPI is the average out-of-warranty service fee per service. The calculation is the revenue they get from those services divided by the number of out-of-warranty services, and we're told these are equal, so that's the 2,800 divided by 2. So what I've done is I've said that it's hardly changed. A $1 change on something like that is not material, so I've put it's decreased, albeit marginal. Why is that? Well, I'm looking at the number of services performed. They've increased quite a lot, but they're still way off target. I've put it may be in an attempt to meet the volume target of 2,800 services. The service centres have offered lower prices than expected, or maybe budgeted would be better. Again, I could make a second comment, but I'm going to go through and only come back and do that if I've got time. For the quality of service, we've got the percentage of returning services due to last faulty service. As you can see, the actual was 8.2 with a target of 8. It's gone up to 11%. So I've written there's a large decrease in the quality of service, leading to the percentage of faulty services increasing by around a third. So that's 2.8% on top of 8.2 is 0.34. Not only does this decrease customer satisfaction as these customers have to return to have more work done, it also ties up the technicians away from servicing other customers, most likely increasing waiting times and further adversely impacting customer service levels. That's definitely 1 mark. That could even be 2 marks. Next, on to resource allocation, the number of services performed per technician. The resource utilization calculation is relatively straightforward. Number of services divided by technicians. We've seen an increase both on compared to the prior year and higher than the target. Our analysis, this has increased against both the target and the prior year, which is impressive. However, and this is a really key takeaway for these sorts of questions, if you can start linking parts back to other parts already done, that demonstrates that you're adding value and you're taking that overall picture. So as we've done some of these now, we can start to see if we're getting some results which link back to something we've already seen. This is another reason why I reserve those last 4 marks, because what I can then do maybe is go back and try and do this kind of approach where I link back to other parts of the building block model. We've just seen above that the faulty service rate has increased drastically, but the number of services performed by each technician has also increased. I've now put, however, it may be the technicians are now trying to rush work, which could account for the increased level of faulty services seen above. With flexibility, we've calculated the change in average operating hours per week, which has gone from 35 to 45, which is a 28.6% increase. There's been an increase in operating hours, presumably due to the increase in the number of available technicians. So we've seen an increase here, which has given additional hours. This is the implication. Customers will value this as they will be able to benefit from more choice as to when they have their EV service carried out. And then new complimentary services offered. It was 1, it is now 1. I haven't shown my workings. I hope the examiner wouldn't penalise me for not showing that. What's the comment? Given that customers value the complimentary services and no increase has been made, it's likely that this could adversely affect customer retention, especially if competitors are offering those complimentary offers. So I think I'm quite comfortable. I've got my 6 calculation marks and I've made 6 comments, all of which will score a mark, which is 12 marks, and maybe 1 up here I think possibly could score 2. Now if I had time I would go hunting to see if I can find the last 4 marks, but only up to the point where I'm using my 36 minutes. Another approach, let's say I had 5 or 6 minutes spare, I could move on to the other section C question and use my 36 minutes. And then whatever I've got left, I can think, where am I best going to get marks? Is it by coming back to this question and putting in some more, maybe doing some more on the section C question we haven't done? If I had any of my section A and B that were still flagged, maybe I would benefit most from going back and doing some of those. There is no right or wrong here. You just need to make a choice. Don't dwell on it too long. What I'm going to do is I'm going to put a couple more comments in some of these, but probably not 4. I'll probably just try and find 2 more things that I can put in to this question. If I got 18 out of 20, that's an excellent mark, so we're more than happy with that. So I've now added 2 more comments in. I've added one into the financial one. The other reason for this difference from target on the return on capital employed was because the non-current assets is lower than the target. Sometimes that's good, but not always. I've put it's also evident that non-current asset value is lower than expected. Whilst it may be the case that this is good as less capital is tied up, caution needs to be applied as old assets may be beyond their useful life and may be linked to the increased fault percentage seen later. So once again, I've added value by pulling some information from here and looping it back to another part. And with competitiveness, this is the one that didn't really change. I put competitive measures can be improved if external data is used. Benchmarking exercise could be carried out comparing fees charged by ACCA to its competitors. This will help them make more effective pricing decisions. So it now feels like I've got 14 of the 16 marks available. Under financial, we could have also talked about the target. Is the return on capital employed target of 15% reasonable? Quality of service, another comment could be the absence of information. Although it uses the KPI return in services, that's not really a very good measure of quality, because all that picks up is when it really has gone wrong. So maybe recommending some sort of customer feedback, and then we're measuring it from a positive aspect, not just a negative aspect. Again, with the number of services performed, it's a lot higher. It's definitely important to understand why that is. Is it because we've got more trained, more effective technicians, in which case that's great? Or is it because we're pushing too hard? And again, we could compare to other parties and see what they're doing. Flexibility, another comment that could have scored a mark in here, is to understand, are there peak times and quiet times? Because if we've increased the number of hours and all we've done is shifted from some customers coming in at some time to a different time, we haven't really improved what we're doing in terms of financials. We've improved the customer service because we're offering better service, but do we also have downtime where we're not utilizing resource? And that goes back to the previous question where we had the 4 definitions and we can't save up those appointments. There probably wasn't much more we could write there. So some of those, that last one I said does stray a little bit off the question, but I think it's probably good enough for scoring a mark. But the point I really want to get across is using the 16 marks to drive the amount of content and detail that I go into. So 6 for calculation. You see I then worked out there were 10 others. There are 6 sections, so I did 1 for each, leaving 4, and then I targeted my answer to try and achieve those remaining 4. I actually only probably achieved 2 of them, but then I've spoken around some other things you could have put in. The point of this sort of question is you've got quite a lot of free reign on what you do. There are lots of right answers, and as long as you are adding value, you are interpreting the data, you're making valid comments, you're making recommendations, you're making reasonable assumptions on why something is the way it is based on this organization and what you know about it, all of those will be able to score marks. What doesn't score well is just saying something like, this is a large decrease in the quality of service. That probably won't score any marks at all. And a lot of students fall short. They shortchange themselves because they don't concentrate on this added value aspect in section C. If it's because they don't know what to say, then that's really difficult. But what's frustrating is they probably actually do know what to say. A lot of the time they just don't do it. Make sure you're adding value, and that's where you're going to collect these marks. Keeping an eye on the clock as well, making sure you're retaining that discipline. It's a bit of a balance, making sure you're getting those 2 things, but that's really a good, strong approach to a section C question. Okay, so we're on to our last section C question in this mock. Once again, 20 marks available here, so we've got 36 minutes we'd allocate. For 4 marks, we need to calculate the standard contribution per pair for each of the 3 sizes of work shoe. And then for each size of shoe, we need to calculate these 3 variances: sales price, sales mix, and sales quantity. 3 marks each, so we'd assume just by glancing across the left, there's 3 sizes, so there's probably 1 mark for each variance for each size. Variance calculations like this, if you can get your head around them through building up a good technique and practice, really easy marks to get for mix and quantity variances, because once you've got the system in place, you just need to put the figures in and get the answer, whereas a lot of people just can't get it in their head of how to do variances, and so they would maybe miss out on a lot of those 9 marks. And then 6 marks, comment on the possible reasons for each type of variance. Well, there are 3 types of variances for 6 marks, so we can probably estimate 2 for each. And then briefly discuss whether consideration of learning curve effect is still relevant when standards set in the next quarter, if their plan is to replace all the skilled labourers with computer-aided manufacturing technology in the making of shoes, and that's 1 mark. Let's take a look at the scenario we're given. Healthy Feet Co. is a family-owned shoe manufacturing business that's well known for its handmade work shoes, which they claim to be safer and more comfortable compared to other work shoes in the market. Given the labour-intensive manufacturing environment, it's common to expect some learning curve effects whenever HF is launching a new design of work shoe. They're planning to roll out a newly designed shoe called the Comfort in 3 different sizes, small, medium, large, in the next quarter. The following information has been extracted from the standard cost card. For each size, we've got the selling price, the direct material costs, the variable conversion cost per pair, and fixed overheads allocated per pair. And remember, the first question was asking us about the standard contribution. On the variable conversion costs, it tells us it's $50 per hour multiplied by the standard labour hours per pair, but as it's likely that an estimated learning curve will appear alongside the production, management accounting has agreed to a standard learning rate of 75%, with the estimated time spent in making the first pair of shoes being 3 hours. An estimate of the labour hours based on this information is given below. So we've got 3 levels of output, 4, 5 and 6 pairs, the cumulative hours, and then the cumulative average hours per pair. And you see, this is just to demonstrate the calculation. The cumulative hours divided by the cumulative output gives the average, and I've shown that on the calculator over here. The standard labour hours per pair has been agreed as the time spent in producing the 5th pair. At the end of the quarter, cost and sales information for all 3 sizes of the work shoe are as follows. We've got the actual variable cost, the actual sales in pairs, and the budgeted sales, and they adopt marginal costing for output valuation. When we're calculating sales variances, as we're doing in part B, because it's using a marginal costing system, we use the standard contribution as opposed to absorption costing, where we would use the profit. But there's probably a clue because we're asked to calculate the standard contribution per pair. So let's go ahead and answer part A, calculating the standard contribution per pair for each of the 3 sizes. So we've got our 3 sizes, small, medium, large. I'm always a fan of using shorthand or abbreviated terminology in a spreadsheet, as long as it's clear what we're talking about. There's no point writing extremely long row titles here. So for small, the selling price is 162, 165, and then 180. And then direct materials, I'm going to take from the table here. I'm going to use a negative figure, because then I can use my sum function. And then the conversion cost per pair, that's going to be a side working. And so the contribution is going to be the sum of the 3 above. Just for completion, I'll put dollars up the top. So this is probably how the marks are allocated. There's probably a mark for this side working, and then 1 mark for each of the columns I've done here. We want to use the time taken in producing the 5th pair in calculating our conversion cost. And it's told us here the time taken for the 4th, 5th and 6th. So if we take the cumulative for the 5th and the cumulative for the 4th, the difference will be the time taken for the 5th. So that's 7.7 and that's 6.76. And so the difference is the time taken for the 5th pair. But we're not there yet. This is in hours. The conversion cost will need to be in dollars, and we need to multiply that by 50. So the conversion cost is 50 multiplied by 94. So that's 47. I always inform my students not to just put numbers that appear from nowhere in the cell, but because the 50 is there, I'm comfortable doing that. But if you've got a number from a calculation, it's better to use the circular reference in, and then the examiner can click on your cell and see where it's come from. If you wanted to do a little bit more, you could add in a little label like that. So this equals minus the figure there, and they're all the same. So that's part A done. I like to highlight my answers. The only thing I would probably change, although it doesn't tell us how many decimal places, I think I would prefer if it was in 2 decimal places. Although it's made no difference, I think it's probably more accurate just in case there are some cents involved with the contribution. Now we're going to move on to the variance question, but we won't be able to reference this spreadsheet, so we're going to have to bring some data across, and I don't want to make a mistake. So I've just put the contribution figures in the scratch pad so I don't risk making a mistake as I bring them across. So part B1, we need to calculate the sales price variance. The sales price variance and the sales volume variance make up the total sales variance, and the sales volume variance can be split into mix and quantity variances. And the sales price variance compares the actual price that we charged compared to the standard price for the actual quantity. So there are 2 ways to do it. I'm only writing this out for the benefit of the video. These are saying the same thing. We either find the difference between the actual price and the standard price, we multiply that difference by the actual quantity, or we multiply the actual price by the actual quantity, and then we multiply the standard price by the actual quantity, and we find the difference. And the approach I would choose would be driven by the way the information's been given to me. In this row here, we're given the actual sales. So for example, for the actual quantity sold at the actual price sold for small is 18,745. So that's given us this whole term here, actual quantity multiplied by actual price. So therefore, I'm going to use the bottom one, use the figure as it's given me there, and take away the standard price by the actual quantity. If you struggle with variances, it's absolutely fine to write it out like that, just so you know that you're picking up the right figures. If you're more comfortable, you'll probably use some sort of shorthand. So this column I'm just copying straight across from what I've been given in the bottom table in the row that I've just looked at, the actual sales. And now I need the standard price by the actual quantity. So for small, the standard price is 162 and the actual quantity is 115. For medium, it's 165 multiplied by the 75. And then for large, it's 180 multiplied by 110. So we've calculated our 3 variances. Some people try to remember which one's favourable, which one's adverse. I always like to work it out. If what happens actually is greater than standard, and we're talking about selling, that will increase our bottom line. So that top one is a favourable. And then because we've used the same process, we can then assume that the sign here makes that one adverse. So that's the answer for the sales price variance for each of the 3 sizes. It doesn't ask us to do a total, but there's certainly no harm in just summing those up to show the overall. And now we'll move on to the sales mix variance. I'm just going to copy the first bit of my table down here so I don't have to rewrite that out. Now the way I like to do mix and yield or mix and quantity variances is I use these 3 headings: the actual quantity at the actual ratio, the actual quantity at the standard ratio, and the standard quantity at the standard ratio. The difference between these gives me my mix variance, and the difference between these will give my quantity or my yield type variance. Others use different terminology. They might say actual quantity and actual mix. I prefer ratio because it then reminds us we're looking at the ratio between the 3 products that they're selling. So the actual quantity at the actual ratio, instead of working in dollars as we were above, we will be working in shoes. When we get to the variance, it has to be in dollars, but we need to make sure we know what units we're working in. And by writing it here, it's a reminder. And at some point, we'll multiply by the contribution, and then that will turn it into a dollar amount. And then we've got our variance. So in terms of shoes, we just can get this from the table here. This is the actual shoes sold in the actual ratio. So effectively, this is what actually happened. So we sold 115 small, 75 medium, and 110 large. And what we need to now do is take that volume that we've sold and then establish what the amount would be for each line if we kept to the standard ratio, i.e. what we expected from the budget. So the way we do that is we sum those up, and that gives us the figure at the bottom, and then that figure gets carried across here because we're now going to share this 300 out based on the ratio that we expected in our budgeted sales, which is this ratio here. You might want to do a side working, or you might be happy to just do it into the spreadsheet here. But what we're saying is normally for small, we'd expect out of this volume of sales, which is 250, 60 would be small. So 60 250ths would be small. So we take 60 250ths of the 300, and that's what ends up sitting in this cell here. And for medium, we'd expect 100 out of every 250 to be medium. So 100 out of 250 multiplied by that bottom one. And here you can either do a balancing calculation, or we can just do the same approach that we've done there. So 90 out of every 250 would expect to be large. So what we've done is taken the actual amount of each sold and then re-established how many of each we would expect to sell had they been sold in the expected ratio. And that's because it's a mixed variance. So we're looking at the impact of the standard ratio compared to the actual ratio. And then we calculate the difference, which is a simple subtraction. So we're still working in shoes. We now need to convert it into a dollar amount. And so our standard contribution comes into play. And this is what I did before. I took the standard contribution, calculated from the previous sheet, and that way I haven't had to try and remember it, and I'm not flicking back and forth. So the sales mix variance is now, we just multiply the difference in shoes by the standard contribution. And then once again, I need to decide, is each of these favorable or adverse? If this is actual and this is actual standard, where this is greater than this, because this is all actual, that means we did better because we're looking at sales. So that's a favorable. The negative one must be adverse. That's favorable. So the overall must be favorable. So that's part 2 done there. Don't forget to put the F's and the A's in. A lot of students forget those. And then we can often get more efficient. I like to copy it, but just remember, I've got to change a lot of this in order to get the calculation correct. But as soon as I change this, it's going to change this. And I want this one over here to be standard quantity, standard ratio. So what I'm going to do is use the reference in here. Although I haven't changed the numbers, if I change one of these, that would change the total, which circles back to what I had up here. I'll show you by example. If that was 90, you see everything changes. So I've locked in this column, and now I need the standard quantity at the standard ratio. Where do I get that from? I just read that straight off the bottom here. So 60, 100, and 90. With a mixed variance, these should be the same. There's no expectation that these would be the same in a quantity variance because we expect that we're selling a different amount to the budget. So our difference is calculated by itself. The standard contribution stays the same. So hopefully you'll see this was a very efficient way to get here. What I do need to do is make sure I get my favorables and adverses correct. As a clue, as a hint, with a quantity variance, these should all be the same. They're either all favorable or all adverse. So here, the actuals are always greater than the standards. The actuals on the right, always greater than the standards. So if we actually always did more than we'd expected, and it's for sales, then they're all favorable. And that's my 9 marks for the variance calculation. The only thing I need to change is I've got my heading wrong here. That's the sales quantity variance. So next we need to comment on the possible reasons for each type of variance in B1, B2 and B3. There's 6 marks. It's a shame the question doesn't come across because we might need to flick back and forth a bit. The 3 obvious headings are the three variances. The approach I would take here is what I want to do is demonstrate to the marker that I understand firstly what each of these variances is. So I'm going to open with a definition for each, and I think that will score my first mark, 1 mark under each, so that's half of the 6 marks that are on offer. But I'm not just going to come up with a textbook definition like I did on the other section C question earlier. I'm going to tie it in with some of the narrative that's here. So I'm not going to talk about price in isolation. I will be talking about price in relation to the shoes that are being sold. And then the way I would aim to pick up my second mark is I will give a reason why that variance has occurred. And my preferred choice for saying why is if there is any information they've given me here, then I will use that. If there isn't information they've given me here, then I will use some idea that I can work up in my head while I'm answering this question as to why that variance could have occurred within a company that does what this company does. So to say that again, I'm going to use an appropriate definition for each of these variances, linking it back to the narrative, and then I'm going to see if I can say why that variance could have occurred, ideally referencing something here, if not, then referencing something that could reasonably occur in a company that makes shoes in the way that Healthy Feet does. For the sales price variance, I've just given a summary of what I did in the calculations in the previous page, and then I've said the favourable variance reflects that the price actually charged was greater than the standard. And given that these are handmade shoes, perhaps there's less supply in the market, meaning that HFCO could increase its prices for these sizes. Conversely, for M, the medium, maybe there's more competition, which meant that actual sales were lower and a lower price had to be offered to compete. And the reason I can say that is it's got my actual sales here, and they'd expect to sell more than they did for this one, but they sold less compared to the others, even though they would normally expect to sell more. If, however, this had been different, had the actual sales been a higher volume, I might have suggested something like maybe there was a bulk purchase and they offered a discount. So I'm using the data to drive the narrative that I offer. Now we'll look at the sales mix variance. So once again, I've tried to offer some information to the marker to let them know that I understand what a sales mix variance is. A sales mix variance will always have some shoes as adverse and some as favourable. And that has to be the case because the total number sold in our comparison, if we go back to this, is always the same. So if one of these is higher in actuals than in standard, then somewhere else there must be offset and another one must be lower. So a sales mix variance will always have some shoes as adverse and some as favourable. The overall favourable sales mix variance of $106 is because a higher proportion of S and L was sold than the standard, and these have a higher contribution per unit than M. But likewise, down here I can see that S and L were sold much higher levels than budgeted. Both S and L sold larger volumes than budgeted, and perhaps the sales team were promoting these sizes more. And sales quantity variance, a favourable sales quantity variance of 1854, reflects that a greater volume of sales was achieved overall than expected. It could be that the benefits of these shoes being safer and more comfortable, combined with HFCO's reputation, means that budgeted demand was underestimated. I hope you can see that I've pulled in information from what I'm given here. I might have gone a bit far with this, maybe this is more than we need for 6 marks, but I've added this in. Alternatively, it could be that as these are a new product, as it says up here, there was a honeymoon period of demand on launch which will now level off. And that does happen. New products, there's a lot of initial excitement, and so maybe the budgeted sales figures are more accurate if we were looking over a longer period, but they've benefited in this initial quarter because they're new. We're almost there now. Just need to briefly discuss, this is for 1 mark, whether consideration of the learning curve effect is still relevant when standards setting in the next quarter if they're planning to replace all the skilled labourers with computer-aided manufacturing technology in the making of shoes. So 1 mark answer, given that the learning curve effect occurs when there's a highly repetitive and labour-intensive process, removing this with computer-aided technology means the effect will be minimal or not present at all. And what that question was trying to do was make sure we understood these criteria. Highly repetitive, labour-intensive process is what's required for the learning effect, along with a workforce that are prepared to learn and improve, and a stable workforce. And that's an example of where they look through some important things in the syllabus and they craft a question which effectively is trying to get you to demonstrate that you remember those bits of technical knowledge. So there we go. We've now finished all questions on this exam. We haven't got any flagged. If we did have some time left and there were any flagged, obviously now would be the time to go back to them. What you could do now, if you did have some spare time, very unlikely, most people run out of time before they get to the end, is you could maybe go back and check some of the calculations. Certainly don't stop early. And then the other thing you could do is you could come back to your section C and This one we felt okay with, but you remember I thought I probably was 1 mark or maybe 2 marks short on this one. So a good opportunity now to go and try and capture 1 or more of those missing marks. So I wish you luck when you sit the exam in a few weeks' time. All the best.